Hello everybody. Today we will discuss TP methods used to determine arm's length price. Number 1. Comparable uncontrolled price method, popularly known as cup method. Most direct method for the determination of the arm's length price. The cup method is used to determine the arm's length price of royalty for the use of an intangible or to determine an arm's length rate of interest on a loan. Resale price method requires high level of functional comparability and is mainly applicable where the controlled party is distributor. Cost plus method mostly useful where semi-finished goods are sold between related parties, where related parties have concluded joint facility agreements or long-term buy and supply arrangements. Also useful where low-end services are provided by an associate enterprise. Profit split method. The profit split method is more relevant in telecommunication industry, pharmaceutical, courier or similar industry where intangible plays a vital role and are employed by both the transacting parties. Transactional net margin method. One of the associate enterprise has intangible asset. Other associate enterprise should be the tested party. Thus, the tested party typically does not own valuable intangibles. Transactional net margin method is appropriate to use in certain situations in which data limitations on uncontrolled transactions make it more reliable than traditional methods. Transactional net margin method is more attractive if the data on gross margins are less reliable due to accounting differences between the tested party and the comparable companies for which no adjustment can be made as it is impossible to identify the specific cost for which adjustments are needed. Lastly, other methods. CBDT has inserted Rule 10AB in the rules by notifying the other method apart from the 5 methods already prescribed. The various data that may be used for comparability purpose under this method are third-party quotation, valuation report, tender or bid documents, documents relating to the negotiations, standard rate cards, commercial and economic business models. The wide coverage of the other method would provide flexibility in establishing arm's length price, particularly in cases where the application of the 5 specific methods is not possible due to reasons such as difficulties in obtaining comparable data, due to uniqueness of transactions such as intangibles or business transfers, business of transfer of unlisted shares, sale of fixed assets, revenue allocation or splitting, guarantee provided or received, etc. However, it would be necessary to justify and document reasons for rejection of all other 5 methods while selecting the other method as the most appropriate method. Thank you.